Hi everyone, in this video we are going to cover entry setups for swing trades. Now all those entry setups are based on the volume profile, and I have a good news for you. If you managed to learn all the intraday trading setups, then learning the swing trading setups should be very easy because those setups are almost the same, only with the daily charts and only on the higher time frames and with different stop loss and profit target. But the logic with the setups is the same. So in this video, basically what I'm going to do is a little recap of those 4 setups, and I'm going to show you a lot of examples of swing trades. Alright, so let's get to it. Let's start with the first setup, which is called the volume accumulation setup. In this setup, you look for a rotation which is followed by a trend, like in a picture. So this is a rotation followed by a trend. Now, next you identify where the heaviest volumes got accumulated in the rotation area. So in this area, you identify the heaviest volumes using the flexible profile. So in this case, it's in here. Next, you draw a line and wait for the price to return to this level again. So you draw a line there and you wait for the price to make it back to the level again. And afterwards, from this place, you go short. All right, you enter a short, you enter in a direction of the trend of this trend. So in this case, it's a short because there was a downtrend. All right, enter your trade in the direction of the trend. So that's the steps you want to take when you are trading the volume accumulation setup. The logic behind this setup, why this setup work, is that first, those sellers who are accumulating their selling positions and afterwards they push the price downwards. Now those guys will be defending their selling positions. They'll become active when the price hits this zone again. So when the price hits this zone, those guys are going to sell aggressively, defend their selling positions and push the price downwards. So that's the first factor that pushes the price downwards. The second factor is the buyers who are pushing the price upwards in this area. Those guys see this rotation, they see it, they see the volumes accumulated in the rotation, and they know that this is a strong resistance. So instead of going against the resistance, they get rid of their positions because they don't really want to risk going against those strong sellers. So they start quitting their positions in here, they start quitting their buying positions in here, and this helps to push the price downwards, because when you want to get rid of buying position, you need to sell. All right, so there are 2 factors pushing the price downwards from the resistance. So that's the logic behind this setup. This is why it works. Now let's have a look at some examples of swing trades using the volume accumulation setup. So in this case, you can see that there was a rotation in here followed by strong selling activity right there. So you draw a line, you wait for the price to make it back to the level, and from this place where the volumes were the heaviest, you go short. All right. Now this is the Australian dollar Japanese yen daily charts. By the way, all the charts I'm going to show you in this video will be daily charts. All right. So in this picture, there is a rotation in which heavy volumes got accumulated right there. And after the rotation, there was aggressive buying activity. Within this rotation, the heaviest volumes were right there. So you draw a line there, you wait for the price to make it back to this line, and you enter a long trade from there. All right? Volume accumulation setup. Now there was also a confirmation of this level. Confirmation was in here. As you can see, the price bounced off this level in the past, and this tells us that this level was a resistance. Now, when the price went past the resistance in here, the resistance then became a support. So this is the price action confirmation of the setup, all right? This is the resistance becoming support setup, confirming our volume accumulation setup. Next example. In here, there was a rotation followed by a strong buying activity. Now, the heaviest volumes within this rotation were right there. This is the point of control of the rotation. So you draw a line, you wait for the price to make it back to the line, and you enter along from there. Now what I also marked in this picture is this opening gap, and usually the market closes such a gap sooner or later, usually sooner than later, but in this case it took around a month for the price to close the gap. But when there is a volume accumulation below the gap, like in this case, then the gap works as a nice confirmation. Alright, the gaps got filled, and afterwards there is this support. The price reacts to the support and goes back upwards again. Alright, so in this case you would go long from this line, from this place. Another example of the volume accumulation setup is in here, in this picture. Again, there was a rotation followed by a strong trend. Because of the strong uptrend, we can expect that those volumes were mostly volumes of strong buyers who are accumulating their buying positions in here. So what you do, you wait for pullback, and when the price hits the level again, in here, you enter along right there. This was the reaction to the level. Now with swing trades, it doesn't need to be that precise. Your trades need some room to breathe. Alright, so as you can see in this example, the price went below the level and only afterwards it reacted and went upwards. This is quite a common scenario for swing trades. This just happens. Alright, so don't be afraid if the price doesn't react to your level all at once. It can take some time. Now let's have a look at another example of the volume accumulation setup. In here there was a rotation followed by aggressive selling activity. This is Australian dollar, Canadian dollar, again daily chart. And if you draw the flexible profile over this area, over the rotation, then you can see that the heaviest volumes within the rotation were right there at this level. So you draw a line there and you wait for a pullback. In here, the price hit the level, you ensure there. This was the reaction. Also, there was a bigger reaction afterwards in here and in here. Now, this is the last example of the volume accumulation setup. And in this case, I used the Apple equity. This is a company, Apple, which makes iPhones and that stuff. And the time frame is still daily. Those are daily candles. As you can see in here, there was a very long rotation, which was followed by this crazy trend. I used the flexible volume profile over the rotation area to see where the volumes were the heaviest. Heaviest volumes were right there. This is the place where I draw the line. And afterwards there was this selling activity. So what happens was strong sellers were accumulating their selling positions there, and afterwards they started pushing the price downwards aggressively. So when the price returned back to this level again, those strong sellers who are building up their selling positions there became active again, and they started selling again, defending their selling positions. And this was the result of their selling activity. Very nice, very fast, and a very precise sell-off reaction. Alright, so as you can see, you can use those setups for all trading instruments you can think of. It doesn't need to be Forex, it doesn't need to be indices. You can also use this setup for single stocks. Alright, so let's move forward. Let's move into the setup number 2, which is the trend setup. You use this setup when there is a strong trend. Within the trend, you identify the heaviest volume clusters, and you use the flexible volume profile to do that. So when there is a trend, you use the flexible volume profile over the whole trend area, and you identify the heaviest volume clusters, the most significant volume clusters within that area. In this picture, there's only one. It is this one. So what you do is you draw a line from the heaviest volume peak and wait for a pullback. So the heaviest volume peak is in here. So you draw the line there and you wait for pullback. So when the price makes it back to the level again, you enter your trade which is in the direction of the trend. So in this case, there was an uptrend. So you are going to enter along. All right. The logic behind this setup is the same as with the volume accumulation setup. There are two factors pushing the price your way. First, it's the buyers defending their buying positions, pushing the price upwards. The second factor is the sellers who are pushing the price downwards and who started to get rid of their positions in here. And when they were getting rid of their positions, they helped to push the price upwards too. So again, two factors pushing the price upwards away from this strong support. All right, so that's the trend setup. Let's now have a look at some examples of swing trades based on this setup. So in this picture, you can see that there was a strong downtrend. I used the flexible volume profile over the whole downtrend area. I identified the most significant volume cluster, which was in here, and the heaviest volumes within the volume cluster were right there. This is the point of control of this volume cluster, or of this whole trend area actually. So what you do is you draw a line, wait for pullback. When the price hits this level, you enter in a direction of the trend. In this case, it was a downtrend, so you'll be entering a short. All right, so let's have a look at some more examples. In here, this is the Australian dollar, Japanese yen. Again, daily chart. There was a strong uptrend. I should have probably used the flexible volume profile over this whole area, but it doesn't matter. We identified significant volume cluster in here. So what you do is you draw a line, wait for a price to make it to this level again, and then you enter a long trade because there was an uptrend. So you enter along. All right. So next example, strong downtrend. So we used a flexible volume profile over this whole downtrend area, and there was significant volume cluster formed in here and this little rotation, and within this volume cluster the heaviest volumes got accumulated in here in this volume cluster. So what you do is you draw a line, you wait for pullback, you go short from there. All right, again, in this case, the price went against the level a bit, but a few days afterwards, the price reversed and went into sell-off. Now, another example, again, Australian dollar, Canadian dollar daily chart. There was this strong selling activity, and I identified heavy volume cluster in here. So what you do is you draw a line there, you wait for pullback for the price to make it back to the level again, and you go short from there. All right, this is pretty simple setup, right? But it's really effective. By the way, in this case, there was also nice confirmation of the level. The price rejected the level twice in the past, very nicely, very aggressively. So this means that this level was a strong support, and when the price made it past the level, the support then became a resistance. All right, so not only we have the trend setup in here, but again, at the same level, we also have the support becoming resistance setup, which is a nice confirmation, and actually my favorite combination of volume profile and price action setups. Now this example is on Amazon equity. This is the Amazon stock, the big company where you buy stuff from. Again, this is a daily chart, and there was a strong buying activity, right? Strong uptrend. So I used the flexible volume profile over this uptrend area, and I identified heaviest volume clusters. First one was in here. There was a second one in here, and a third one in here. So if you look at the first one, you can see how the price reacted to it very nicely. So this is the reaction to the first one. The reaction to the second one is in here. Also nice reaction, not that big, but pretty quick and quite precise. And the reaction to the biggest one, to the biggest volume cluster, is this one. Alright, so again, you can see that this setup works very nicely also on stocks, not only on forex or indexes. So if you like to invest in stocks, then you can do it this way. It's very effective. Now, another example of the trend setup. Actually, this is example of trend setup and of volume accumulation setup. Now, there was an uptrend which started with those volumes. So this was the volume accumulation setup, right? Rotation followed by a strong trend. So you draw a line there, you wait for pullback, you go long from there. That's the volume accumulation setup. Now the trend setup is in here. There's a volume cluster, and what happened here was the price went upwards. There was one candle, one daily candle formed above the volume cluster. That's this pin bar candle. Then the price returned back to the level, and this is where you enter your long. This is the reaction. All right. Now, last example of the trend setup. In here, there was a strong selling activity. And within this strong selling activity, I identified heaviest volumes in here. This is the heaviest volume peak, heaviest volume cluster within this downtrend. So I draw a line there at the place where the volumes were the heaviest. I waited for pullback and I went short from there. Alright, so that's for the trend setup. As you can see, the price reacts to it very nicely, no matter if you use 30-minute chart for intraday trading or daily charts for swing trading. Now the third setup you can use for swing trading with volume profile is called the rejection setup. I must say that I use this setup the least out of those 4 setups which I'm going to show you. I would say that it's the hardest to identify, and it also doesn't work as well as the other setups, but it's also profitable. I also trade it. So here's how it works. All right. So first you look for a strong rejection of higher or lower prices. This is a strong rejection. Price goes one way, then aggressively turns and goes the other way. Within this rejection, you identify the heaviest volume cluster. You use the flexible volume profile in the whole rejection area. All right, this is the whole rejection area. And within the rejection area, you identify place where the volumes are the heaviest, the most significant volume cluster. In this case, it's in here. Now what you do next is from this place, you draw a line and you wait for pullback. The same approach as in the previous setups. You wait for pullback. When the price hits this level, you enter in the direction of the rejection. So in this case, there was a rejection of lower prices. This is a sign of aggressive buyers. And for that reason, you are going to go long. All right, you are going to enter in the direction of the rejection. Now let's have a look at some examples of this setup. Right there was a rejection of higher prices. This is a sign of aggressive sellers taking over. So I used the flexible volume profile to see where the volumes were the heaviest within this rejection. It was in here. This is the most significant volume cluster within this rejection. And the volume peak within this volume cluster is in here. So you wait for pullback. When the price hits this level, you go short. You enter in the direction of the rejection. So in this case, this was rejection of higher prices. It's a sign of aggressive sellers. So for this reason, you are going to go short. So let's have a look at some more examples. In here, there was a rejection of higher prices. Heaviest volumes were right there. This was significant volume cluster within the rejection. You draw a line, wait for a pullback, go short, right? This one was pretty easy to spot. Now the next one is the rejection of lower prices. The most significant volume peak is this one. This is where the volumes were the heaviest. If you look closely, you will see that the volume profile is the thickest in here. So you draw a line, wait for pullback, and you enter in a long trade because this was a rejection of lower prices. All right. Now the next one, there was a smaller rejection of higher prices, not that significant. Heaviest volumes were in here. So this is the level you want to go short from. You wait for the price to make it back to the level. And this is where you go short. Now it doesn't really matter how long you wait for the level to get hit. It can take a year or 2 years, it doesn't matter. Markets have very good memory. If you are talking about swing trades, then I never really deleted any level just because it was old. I was trading levels successfully which were years old. Markets have very good memory, especially when you use like daily candles which show you very significant levels. So it doesn't really matter that, for example, in this case, we waited 1, 2, 3, 4, 5 months until the price returned back to the level. It doesn't matter. All right. Now the last example of the rejection setup, this one is on FDAX. There was rejection of lower prices, and the heaviest volumes within the rejection were right there. There was the volume cluster, and the heaviest peak of the volume cluster was in here. So you draw a line there, you wait for a pullback. As you can see in this case, we waited for 1, 2, 3, 4 months. And the price hit the level and immediately made a reaction right there, this one. All right, so that was the rejection setup, and let's now have a look at the last setup, which is the volume up-down setup. Now I must say that I think that this setup works a bit better with swing trading than with intraday trading, because with intraday trading, the daily sessions play important factor there. You know, for example, Asian session have low volumes, US session have high volumes. The heaviest volumes are usually when there is the overlap between US and European session. So this stuff makes this setup a little bit harder to trade, but with swing trading, you don't really have this problem. So that's why I think this setup works a bit better with swings. All right, so let's do a little recap of the rules of this setup. First, you look for a spike in volumes on the volume up-down indicator. This is the volume up-down indicator. It's standard indicator, it's built-in indicator in a NinjaTrader platform. I used the standard setting. I didn't change anything apart from maybe the width of those candles, but apart from that, nothing. So you just use the standard settings of this indicator. Now, when you spot the spike in volumes, like for example in this case, you draw a flexible volume profile over this area, including one more candle before and after it. So the volume spike was those 3 candles. This is spike in volumes. You can see that those 3 candles are much bigger than the rest of the candles, which are in here and which are in here. So those 3 are candles we are interested in. But we are also going to stretch the profile over those 2 candles, one on left, one on right. All right, so this is the area you stretch the volume profile over. Now, in this area, you identify the heaviest volumes on the flexible volume profile and you draw a line. So, as you can see in the profile, the heaviest volumes were right there at this price level. So, you draw a line there. Then, the price needs to move away from the level at least one whole day, must be above or below the line. So at least one day, at least one candle needs to be above. Price goes away from the level, then goes back, and when the price hits the level, you enter the trade exactly at the level where the volumes were the heaviest. And you enter in a trade of the direction of the movement which started after those heavy volumes. Alright? Now the logic behind this setup is basically that you spot that something important is happening, and you spot it in here on the volume up down. Because when there is something important happening, then big institutions start to jump in. Alright, so you spot that something is happening on this volume up down indicator. Now you select the candles where something was happening, and you identify the price level where most of the stuff was happening. Alright, so it was in here. Now at this point you don't know what was happening, but if the price goes upwards from this place, then you can expect that buying was happening in here. If the price went downwards from this level, then you can expect that selling was happening in this place. Alright, that big institutions were selling there. And when the price makes it back to the level again, you can expect that the same institutions who were in here will become active and they'll be defending their positions. This is the same logic as before. Alright. So anyways, that's for the steps and for the logic behind this setup. Let's now have a look at some examples. Now in here, maybe you've noticed that the candles in this indicator are a bit wider. I just made them wider in the indicator settings. It's not that important, I just want it to be better visible for you guys, alright? Otherwise I didn't change anything. So, this is Eurodollar daily chart. In here you can see that there was significant volume spike. Those volumes were bigger than the volumes around them. So you select this whole area with a flexible volume profile and you identify the heaviest volumes within this area. It's in here. Now you wait for the price to move away from this area. Price went downwards from this area, which means that most likely sellers were building up their selling positions there. So when the price makes it back to the level again, those sellers are likely to start defending their selling positions and push the price downwards. Alright, so this is the reaction. Now another example, heavy volume spike in here. Those candles show heavier volumes than those candles around them. So you select the whole area with a flexible volume profile. Heaviest volume peak is in here. This is where the volume profile is the thickest. So you draw a line there, and when the price makes it back to the level again, you go long. Now another example. Now I'm interested in this area because those candles, those volumes are heavier than the volumes on the left and on right. So this is a significant volume peak. This is the area I'm interested in. And the heaviest volumes within this area were right there in this volume cluster. And this is the level where the volumes were absolutely heaviest. Price goes away from the level, indicating that those were buyers. When the price makes it back to the level again, you go long. Now another example. In here there was a volume peak right there. So you draw the profile over this area. This is the area you are interested in, those candles. Now you identify where the volume profile was the thickest. and it was the thickest in here. So at this price level you draw a line, you wait for pullback. When the price hits this line, you go short. I think that in this case the price actually missed the entry. Yeah, it did. Just tiny bit before the level. So when something like this happens, you just discard the level, you don't trade it anymore. It clearly got tested, the price turned a little bit before the level. It didn't reach it, so this would be a no trade scenario. I need to say that this sort of happens more often than you would like, I would say. But it's part of trading. Don't chase the trade. If you miss it, you discard it, and that's it. Don't enter the trade for the second time, only trade the first test. And if something like this happens, discard the level, forget about it, and search for new levels. Alright? Now, another example. Volume spike in here. So you draw the volume profile over this area, over those candles. Heaviest volumes within this area were right there. So you draw a line, wait for pullback, and this is the reaction you are waiting for. Alright, so next example. Volume peak in here. Those candles have heavier volumes than those and those candles. Now you identify the heaviest volumes within this area. It is in here. This was the place where the volume profile is the thickest. So you wait for price to make it back to the level again. And because the price went upwards from this volume cluster, then you are going to enter along from there. Because you expect that those buyers will be defending their buying positions and they'll push the price upwards from this level. Now, as you can see, in this case, the price didn't react exactly at the level, closed below the level, and only the next day the price actually turned and went upwards. So don't really feel bad if something like this happens. It's quite usual. You don't need to watch the charts all the time. Actually, if you do, it makes trading more frustrating. So it's just better to leave some limit orders and close your trading platform and don't look at it all the time. It's better, especially in situations like this when the price goes against your level. Now, another example of the volume up-down setup. In this area, there were heavy volumes. In here, heavy volume spike, which means that something was going on in this area, in this rejection. So what you do, you select the whole area with a flexible volume profile and identify the heaviest volumes. In here, this is the place where the volume profile was the thickest. So you draw a line, and when the price makes it back to the level, you go long. Now in this case, there was only a small reaction, and then the price went below the level, and only afterwards there was another and bigger buying activity. Now if I go a little bit ahead, I wasn't talking about stop loss placement and take profit placement yet, but in this case my stop loss would be either in a low volume area, which is in here, or below this swing point, which is in here. Now I trade with alternative stop loss method. I'll also talk about this later. And if I use the first stop loss with risk reward ratio 1, then this would be the profit target. So this one would be a winning trade. And if I used this stop loss, let's call it stop loss number 2, then my take profit would be somewhere in here. Alright, because I trade with risk reward ratio 1. So this distance which I risk is the same as this distance, which is the take profit. And as you can see, the daily candle did not close past this swing point. And when daily candle doesn't close below swing point, I don't quit a swing trade. I'll talk about this more in detail in some next part, but I just wanted to comment on this trade because it may seem like this level would actually be a losing trade, but in fact, no matter what method you used, it would be a winner actually. I think that I'm going to use this picture later when I'm talking about the alternative stop loss. Anyways, let's move forward. Let's have a look at another example. Again, volume up down setup, daily candles. I zoomed the picture a bit in, and right there was a volume peak of 2 candles being bigger than the rest of the candles on the left and on the right. So you select this whole area with a flexible volume profile, identify the heaviest volumes, which are in here. It was close to this area, but if you look closely, then you can see that those volumes are heavier. All right, now there are 2 whole candles above the level, which means that you want to go long from there. Now, I must say that this sort of thing happened in a rotation, so I'm not really sure if I would have actually taken that trade, because what I want to see is the price goes more away from the level, not just like 2 candles which are really close to the level. But I just wanted to show you that this setup can work in a situation like that in a tight range. All right, but I personally would have probably missed this one. Now, another example is in here. There is a volume spike right there. You use the flexible volume profile over this area. Heaviest volumes being in here, so you draw a line. Price goes downwards, which means that you will be looking for a short. There's the pullback, and you go short from there. This is the reaction. All right. Now another example is in here. There's a volume spike right there. Those candles are heavier than those, and those candles, those stand out. So you select the whole area with flexible profile. If you look closely, then you see that the heaviest volumes were right there. So you draw a line, wait for pullback, and from this level you go short. But if you look closely, you can see that the price actually missed the level. So this was the reaction you were waiting for. Unfortunately, you weren't able to jump in the trade because the price reacted a little bit sooner, just a little bit. So as I said before, in case like that, you want to discard the level. You want to forget about it. You don't want to trade it again. All right, this level is already spent. This was the reaction to the level. All right, so this would be a no trade scenario. Now, another example is this one. There are heavy volumes, volume spike in here, in this area. Now it's pretty clear where the volumes are the heaviest. It's in here. This is the point of control of this whole area. So what you want to do is you wait for the price to go away from that area. In this case, it went upwards. So now you know that those guys were probably strong buyers. So you wait for pullback and you go long from there. Another example, if this is this volume spike, heaviest volumes in this area are right there. This is the place where the volumes were the heaviest. The price goes upwards from that level, you wait for pullback, and when the price hits the level again, you go long. Alright, now I should also say that if there is a single candle, like for example this one, which is way bigger than the rest, I personally don't consider it as a volume spike. If there's only one candle, I need to see more. Alright, like in this case, or in this case, or in this case. If there's just one, then I'm not really into it. Maybe you guys can backtest it and maybe it will work for you, but I personally prefer if there are more heavy candles than just one. The reason for that is that there could, for example, be some macro news, and heavy volumes traded during the macro news. That can happen within one day. And it's not as significant as if more heavy volume candles got created. Because if there are more candles, then you can tell that there's probably something important going on in the area. Alright? Now let's have a look at the last example based on this volume spike. In here you can see that heaviest volumes within this area were right there, so you draw the line, wait for pullback and enter a long because the price went upwards from this area. This is why you go long from there. Alright, by the way, maybe you've noticed that this setup sometimes confirms the other setups which I showed you. So for example, if you look at this picture, you can see that this basically is the trend setup, right? There is a trend and there is a volume cluster within a trend, right? So sometimes there are setups which overlap with this volume up down setup. There's nothing bad about it. I would say that it's pretty cool because this setup confirms the other setups. So in this case, you would have volume up down setup and also trend setup pointing to this level, all right? Telling you to go long from there. Alright, so that's about the volume setups for swing trading. Those are the main setups which I use. I use them all on the daily chart, on all the trading instruments. And what I also like is when I see some confirmations of the levels which I create using those setups. So in the next video, I'm going to cover the confirmation setups. Alright, so I'll see you there.